Ma'am, can I start?
Just 1 minute more, sir. Students
Okay,
are joining in. They will
okay,
join with no
okay,
problem.
sure, ma'am, sure, ma'am. Okay,
They automatically join. Start at 9:02.
9-2. Okay, ma'am, sure.
They join. So you can start.
Yes, ma'am, yes, ma'am. I am just sharing my screen. Is my screen seen, ma'am?
Yes.
Okay, ma'am. Good morning, students. My name Paras Vilas Kosti. I am the MEd second year student. I am going to give you the topic of, as ma'am told you, functions of RBI. So first, ma'am, my slide is, yes, okay. So your chapter name is Money Market and Capital Market in India. These two constituents we are going to study in this chapter. So first of all, the index. So this content today we are going to cover in our lecture, that is the barter system, difficulties in barter system, evolution of money, definitions of money, what is finance, then Indian financial system chart, financial market, money market, central bank definitions, Central Bank of India, RBI, history of RBI and functions of RBI. So these are the topics for today's presentation. So barter system. Today we are using the legal tender money, but prior to evolution of this money, as you all know that we have a agrarian technology, or we were living in agro based country. Our country is called as the agricultural country. So there we have barter system was there before the money came. So what was the barter system? Barter system was nothing but the exchange of goods versus goods. Means what? If one person wants rice, he used to exchange his product, that is say milk, then wheat, jawar, with other person. So where goods were exchanged for goods, such system was called as the barter system. So, but after some time, or after some period, the barter system came to be endangered. Because why it came to be endangered? Because uh, there the commodities, some difficulties were found in this system, that we are going to discuss in detail. So difficulties in barter system. First was lack of double coincidence of wants. So what is lack of coincidence of wants? That is, if one person wants rice and other person wants cotton, but cloth, that is clothes. So what used to happen? Sometimes these wants did not match with the people who were sharing the goods. So coincidence, the person who was demanding cloth did not want rice, or the person who wished to give rice did not want. So like that way, coincidence of wants used to happen. Then next is lack of common measure of value. As you know, solid things or solid products are measured in kgs. Then liquid is measured in liter, milliliter. So their measurement value differed. So lack of common measure was not there. So if one person wants some solid product, that is the what we can say the rice. If someone wants rice and if someone wants milk, then there came a measure that milliliter and kg, these two values did not match with each other, so their measurement value came. The next is difficulty of storage of goods. Storage of goods was a difficulty because as you know that perishable goods cannot be stored for long time. That is the foodstuffs, food grains cannot be stored for long time. So the storage problem occurred. Then next was the problem of indivisibility. What is meant by the term indivisibility, students? Indivisibility is nothing but dividing something into different parts. So for example, here I would like to give you one example, common example, that in a village, if there was a marriage ceremony in a village, then what used to happen? And the person who had the horse, he demanded that something should be given in respect to the cost of the horse. So the clothes cannot be divided. The clothes can be divided into 2 or 3 sets, but the horse cannot be divided. So like that way, indivisibility problem arose. Then next was the problem of making deferred payments. Deferred payments means what? The payments which were taken in the same form. Means what? If some goods had been taken from some person and he had to return it in the same form. For example, if some milk products had been taken, then the milk products cannot remain in the same pattern till they were returned. So deferred payment problems occurred. So this barter system failed in India. Next is evolution of money. How the evolution of money happened? So students, evolution of money, as you see the chart, it started from commodity money and it ended at plastic cards or electronic money which we are using today. So what this chart says, student, commodities means what? Animals like sheep, cow, goat, all these were the commodities which were exchanged in case of money. So commodity money, then gold. You know that in our country, there are some things that we had big kingdoms where the salary was paid in gold coins or silver coins by the king to his servants. So gold was also medium of exchange. But as the time passed, this medium also failed because gold got costlier, or it was not safe to keep gold with one uh, in our house. So as the time passed, then next came the metallic coins. Metallic coins means what? Which were made of zinc, copper, all these materials were used to make the coins. These were called as the metallic coins. But metal also rusted because you know that iron, zinc, copper, they rust because of climate conditions. Climatic conditions, we cannot store it or we cannot keep it for a long time. So metallic money also failed. Then next came the paper money. Paper money, that is the currency notes. Currency notes also had a problem that their denomination was accepted everywhere, but still keeping notes, uh, especially during the rainy season, was a difficult task. So paper money had some disadvantages. Then came the electronic money. Electronic money is nothing but the money which you are using through the e-wallets, that is the Paytm, Google Pay, all these wallets or transferring money through mobile from one account to another or from one person to another. So these are called as the electronic money. Electronic money means what? They are also called as digital money, students. Then cryptocurrency. Cryptocurrency also is one of the latest type, that is the Bitcoin. You must have heard about the Bitcoin in the last 2 3 years. You must have been seen about the cryptocurrency, that is the Bitcoins have been introduced. But what is Bitcoin? Its value diminishes or increases per day. In 24 hours, its value increases or decreases. So that is a cryptocurrency, or it is also called as, in the digital form, it is transferred from one place to another. And lastly is the plastic cards. Plastic cards is nothing but the debit cards, credit cards which you use. All these things, uh, all the debit cards, credit cards, all these things come in the plastic money. So presently, because of demonetization, you must have heard that there was demonetization on 8th November 2016 by the Honorable Prime Minister, that paperless currency or 1,000 or 500 notes were banned or demonetized from the currency. So at that time, what was the condition? That the government suggested that use the e-wallets or use the e-money. So these can be transferred by plastic cards. Then next, definition of money. These are the two popular definitions given by. First is Professor F.A. Walker. He says money is what money does, and means what? Money can do the task which were done earlier also, but in the form of acceptability, because acceptability came because of legal tender money. Acceptability came. So money is what money does, means money can perform the activity of buying and selling. Then according to Professor Crowther, money is anything money is anything that is generally accepted as means of exchange. Means what? If you carry in your wallet 1,000 rupees or 2,000 rupees, then that 2,000 rupees value will be same, that is 2,000 only denomination everywhere. In any part of the country you take that 2,000 rupees note or 1,000 rupees, that will be same. So it is generally acceptable as a means of exchange, and which at the same time acts as a measure and store of value. Means what? Money can be stored in a value. Means what? We purchase real estate, we purchase flats, we purchase land. So money can be invested in gold, land, real estate material, or bonds, investment, securities. So what? We are saving our money or storing our money or converting our money from one form to another. That is, if we are carrying hard cash in our wallet, that hard cash will be converted into some asset. As you have learnt in accounts, that assets are there. What are? There are some fixed assets, there are some liquid assets. So you can convert this cash into liquid assets like gold, then land, all these things. So and it can be stored. Then next is the what is finance. Now finance is the backbone of money. Why it is the backbone of an economy? Because no economy or no business, whether it's a sole trading concern or whether it is a partnership, whether it's a joint stock company, any kind of business you want to run, you require finance, and finance is nothing but money. So finance basically refers to the management of money. It includes funds needed by government, individuals, business houses, and for various purposes. Means who are the users of this money? That is, first is the government, second is individual, that is like we people, then business houses, that is the Reliance, Tata, all these businesses which are running, and for various purposes. Then, thus finance is categorized into two types, that is personal finance, corporate finance. Corporate finance is also called as company finance. Then public finance. Public finance means what? The MSCB, the roads, the taxes which we pay to the government, all this comes in public finance, students. The country's financial system is responsible for the allocation of mobilization of funds. What is allocation? Allocate means to distribute the funds, and mobilization means to move from one asset to another, or from one thing to another. Mobilize means to move from one asset to another. Then these are the Indian financial system chart. First, financial institutions. Financial institutions means nothing but the institutions which gives us loans, which grants money. For example, the Muthoot Finance, you must have heard that they take the loan, they take the gold from you and give you the gold money, or give you the loan in the form of by taking your loan. So financial institutions, that there are private institutions, government institutions, some chit funds are there from which we can take loan. Then next is the financial market. Then financial instruments. Financial instruments are nothing but some instruments through which money can be transferred for short period of time. That is trade bill, bill of exchange, equity shares. All these are the some examples of financial instruments. Then financial services.
Sir, your voice is cracking.
Okay, ma'am. Okay. Now it is clear, ma'am. Hello.
Can't hear you properly.
Okay, ma'am. Okay, wait. I think range problem might be there. Now you are able to hear, ma'am. Hello.
And now it is clear.
Okay, ma'am. Okay, actually range problem might have happen. Wait, ma'am. Wait. Yes. Okay. So in financial instruments and financial services means also some services that are provided. That is, finance is given to some big companies or big corporates for using or lended money. Then next is financial market. The first slide which you have seen, that is the financial market. So what is financial market? Financial market refers to a market where the sale and purchase of financial assets such as bonds, stock, derivatives, government securities, foreign currency, etc. is undertaken. Now these assets, that is bonds, then stock, derivative stocks. In accounts, you must have studied that while starting a business, first thing what we have to bring, that is the capital. Capital is bought in the form of fixed assets, that is like building, land, machinery, all these are fixed assets. So that comes under the category of assets. Then next is the bond. Bond means what? They are interest coupons like thing. Means what? When we invest our FD in the bank, we get some interest. In the same way, this is a type of borrowed capital which the company takes from its investors. That is the bonds. Then government securities means what? The all the equity share certificates, then stock certificates, debenture certificates, all this comes in government securities. Then foreign currency. Why foreign currency? You must have known, students, that there is foreign exchange department or foreign exchange minister is there in every country. So why he is there? Because the import and export which happens on between two countries, there the money has to be converted either into their currency if we import something from them, and they have to convert the money into our currency, that is rupees, if we export something to them. So for this purpose, if you visit some foreign country, we have to take some cash with us. So what we do, we go to the Indian Overseas Bank or any foreign exchange exchange, and we deposit our Indian rupees, and that Indian rupees value, what is it, say 70 rupees per dollar, 60 rupees per dollar. If we want to go to a country where the dollar currency is there, then we get the cash, and we carry that cash to that country, and vice versa. When we return from that destination, we if some pounds or if some dollars are remaining with us, we again go to our foreign exchange and take the Indian rupees from them. So for that purpose, foreign currency is important. Then financial market operate through banks, non-banking financial institutions, brokers. Brokers means share brokers, or some middle persons, where in the stock market the shares are sold and purchased. Then next, mutual funds and discount houses, etc. Financial market includes two main parts that we have to study in this chapter, that is the money market and capital market. First of all, we will start with money market. So what is money market? Money market is a market for lending and borrowing of short-term funds. Short-term funds means what? Whose term loans. You must have seen the example of the life insurances, that is happening, term insurances or short-term insurances. So like that way, we require short-term funds. Short-term funds means what? Whose giving power is, or giving time is not more than 1 year. It is less than 1 year. It is at least 1 year or less than 1 year. So instruments as trade bills, government securities, then promissory notes. Promissory notes you must have studied in bill of exchange. That promissory note is given, and on certain date the promissory note will be matured and the person will get the money back. And it is marketable with the maturity period of 1 year. Its maturity happens either 1 year or less than 1 year. So this is the so main function of money market you have to study is lending and borrowing of short-term funds. This is the highlight of this market, where not long-term trading is not done, but it is done for a short period of time. Then next, central bank definition. So MH Decock, central bank is one which constitutes the apex of the monetary and banking structure of the country. Every bank has its own, what we can say, has its own central bank. Every bank, every country. Okay. For example, USA also has its own central bank. Then Japan also has its own central bank. In the same way, it is at the apex. Apex means, the word apex means at the top level. It is like the same way, like our judiciary system. In our judiciary system, as we know, that at the top level there is Supreme Court, then high courts, and then the district courts come. So in the same way, central bank is operated at the top level. It is also called as the bankers bank, and such a bank is controlling all the commercial banks and also helping the government. So then Professor W.A. Shaw, central bank is a bank which controls credit. Which controls credit means what? Which controls money which is circulated in the economy. During the demonetization time, you must have heard that currency notes of 2000 or currency notes of new 500 notes were distributed. So why they were distributed? Because of the permission of the central bank, that is the RBI. Then next, Central Bank of India. Reserve Bank of India is the Central Bank of India, or the Apex Bank, and the logo looks like this. Then next, history of RBI, how RBI became the what we can say, the central bank. So first of all, we have to study the history of RBI. Reserve Bank of India, RBI was established and started functioning from 1st April 1935. Means before we got independence, this bank started functioning. RBI was started as a non-government institution, almost the entire share capital being held by the private shareholders. Means it was like a private bank. It was not a government bank, but first of all, it was a private bank. Then RBI was set up on the basis of the recommendations of the Hilton Young Commission. Means one Hilton Young Commission had came, and that gave the rights, or that said, we have to give, or we have to become, the Reserve Bank of India can be made as the Central Bank of India. Then the RBI Act of 1934 provides the statutory basis. Statutory means compulsory. In companies also there are statutory functions and general functions. So statutory means what? Compulsory functions, mandatory functions, students. Basis of functions of the bank, RBI was nationalized on 1st June 1949. Means nationalization was done on 1949, 1st June 1949. Then now, functions of RBI. As I told you, issue of currency notes. So RBI has the right to issue currency notes. So all denomination currency notes except 1 rupee note and coins, means the metallic coins and 1 rupee note. All other denominations are
Sir, we can't hear you.
okay, ma'am. Actually, little poor internet has been there. Now, ma'am, it is clear, ma'am. Wait, it is clear, ma'am.
Now it is clear.
Okay, then I will not put on the slideshow now, ma'am. Okay.
Yes.
10 minutes are remaining. Okay, ma'am. Sure. Issue
So
of
you go on with the Reserve Bank.
yes, ma'am. So it is the banker to the government. Means government can take loans. Government can take loan from the Reserve Bank. We people have to go to the commercial bank, but the government can take loan from the Reserve Bank directly. So it is called the banker to the government. It finances the government, supports the government. Then issue of currency notes, that point I told you first of all only. Then next is bankers bank, that is Apex Bank. Beyond RBI, there is no bank in our country, or beyond central bank, there is no any bank who controls the central bank. So central bank is the bankers bank. Then next, controller of credit, it controls the credit of the people. Means what? It circulates the money in the economy. So they take, so that the fund shortage does not happen in the country. So it is a controller of all types of credits. Then data collection and publication of data. Data collection means what? Different data is collected. Okay, different data is collected by this bank. Means what is the situation of the country, or what things are happening around. All these data related to financial matters are collected, and that is published in every report, yearly report of the bank. Then next is custodian of foreign exchange. Custodian of foreign exchange resource means what? Every commercial bank has to give some percentage before getting permission from the central bank. So foreign exchange reserves, some foreign exchange reserves has to be maintained by the what we can say, it is a custodian. Means what? It has the control, overall control over the circulation of foreign exchange reserves. Then promotional and developmental functions. Promotional and developmental functions, what are that? RBI also performs certain promotional and developmental functions, such as extending banking services to to semi-urban and rural areas. Semi-urban and rural areas means what? To the village area, because as you know, currently Jan Dhan Yojana has been introduced by the Modi government in 2014. So what is that? Ki all people should have a bank account, whether whether they are rich people or
Sir,
poor
we
people.
can't hear you. Your voice is breaking.
Okay, ma'am. Okay, actually, internet problem slight. Now you are able to hear, ma'am. Hello, hello, ma'am. Now you are able to hear. Hello, ma'am.
Sir,
Ma'am, now.
network issue, please. We can't hear you at all.
Okay, ma'am. Wait, ma'am. Now you
Yes,
are.
sir.
Now.
Yes, sir.
Okay,
Yes,
ma'am.
now I can hear.